Hi, Lenore here, and I'm going to go over problem 4-3A in your textbook. It is completing the accounting cycle, so this is going to include adjustments and closing entries. So the problem is on page 201 and 202. I've listed everything we're given in the unadjusted trial balance, and I want to emphasize something for you. I've also included an empty row, as you can see, and that's just to keep things separate. These are the assets, here are the liabilities, stockholders' equity, revenue, and expenses. So the first adjusting entry says that laundry supplies on hand are $3,600. So I'm going to use my T account in order to visualize this. So laundry supplies, right? The name is always on the top. The beginning balance, or the balance as of June 30th, is this. So I'm going to put that here, $21,500. And it says laundry supplies on hand. Here is the hint, on hand. This means the ending balance. So let's put a line in here. And this is the ending balance. So if this is the ending balance and this was the beginning balance, the adjustment amount is the difference between these two. So let's make this look a little bit better. Put a double underline, like so. So now we're going to create our adjusting amount. We're going to take the beginning balance less the ending balance. And this is the adjustment balance. So our journal entry will be a debit to laundry supplies expense and a credit, right? Because this is a credit to laundry supplies. And remember, I like to put in parentheses for you, the student, that it's an asset account. So the dollar amount, let's see if we can make this just a little larger so it all fits. So the dollar amount is going to be a debit to laundry supplies expense, $17,900, and a credit to laundry supplies, the asset, $17,900. And I'm just going to write here, laundry supplies adjustment. So I'm going to put it right here in my spreadsheet. So laundry supplies expenses first, and I don't have one in my expense, so I'm going to add it. Laundry supplies expense. So when creating or making your adjusting journal entries, if you don't have the account, just type it in. And remember, this is our original unadjusted trial balance, so I need to put the debit in this column here. And it was $17,900 as a debit. And this one is $17,900 as a credit. So there's my debit, there's my credit, and there's something wrong with my formula. Found it. Because it didn't include those dollar amounts. Okay, so here's the T account. Here's the journal entry. Now our second one, here, let me make a little row here so you can just see it a little bit better. Okay, the second one is insurance premium expired. Think of expired and think of expense. Expired, expense mean the same thing. So the amount expired during the year are $5,700. So here's our prepaid insurance. So out of this $9,600, $5,700 have been expired. So again, we don't have insurance expense, but we're going to add it because that's the account we need. So the debit is to insurance expense. and the credit is to the asset, prepaid insurance. Dollar amount is $5,700, a debit to insurance expense, a credit to prepaid insurance. And our brief explanation is expired insurance. Okay, so let's add it in over here. The debit is to insurance expense. So I need to add that account. And that is a debit of $5,700. The credit is prepaid insurance, and that is also $5,700. So again, my debits equal my credits. Okay, depreciation. As mentioned earlier, depreciation reflects the decrease due to usage, years used, economic worth of the equipment. The longer we have it, the less worth it has. So that is always, and I think I told you to remember the acronym DEAD. That means the debit goes to the depreciation expense. That's the DE part. And the credit goes to accumulated depreciation. So if we think of dead, an asset dying or decreasing in value, the debit should always be to the DE, and then the credit should always be to AD, depreciation expense, accumulated depreciation. Later in, we'll learn about how to calculate depreciation expense. But for now, they just are giving it to us. There's multiple methods. And the explanation is depreciation adjustment. Again, we don't have an account called depreciation expense, so I'm going to add it. And that dollar amount is $6,300. And accumulated depreciation, remember, that's a contra asset. A contra asset. So that will increase with a credit. Almost done. Wages accrued but not paid. That means that the end of the month falls in July. In this situation, the end of the month of June wages fall in the July payday. So we just need to expense or accrue the few days that won't be paid until July. So that's a debit to wages expense and a credit to wages payable, because we're going to pay those, just not in this time frame. 11,000 or 1,100, 1,100. And accrued wages. So put a little space there so you can see it. So we have wages expense, but we don't have wages payable. So I'm going to add that up here because it is a liability. All right, so wages expense. Remember, I'm always putting the debit in first. 1,100, and then wages payable is the credit, 1,100, and something is way wrong because this is not equaling. What happened? Oh, I see what happened. I missed somehow my depreciation expense number. There we go. So you can see I was able to find that error quickly because these two didn't add up. I always suggest use the spreadsheet. But here we go. We're done. We have our adjusting journal entries complete, and I've put them into the two adjustment columns. So with that, Lenore out. my next video, I'll show you how to calculate the balances.